Hello, and welcome to the Accounting Podcast, your weekly roundup of news in the profession. I'm Blake Oliver.
And I'm David Leary. Blake, travel. You traveled last week. You're traveling again this week. I'm traveling the week after that. How was last week? Where'd you go?
I was in Seattle and Los Angeles for the Advisory Amplified tour being put on by Madeline Reeves and Fearless Foundry, and it was a lot of fun. It's a road show going around the country, 6 cities. This week, I will be in Chicago and Austin. So this episode probably won't come out in time for the Chicago folks to hear about it, but if you're going to be in Austin on Thursday, come to the roadshow. Check it out. Go to advisoryamplified.com. The following week, I will be in Atlanta and then Boston. So come out, say hi. You'll get to hear a live podcast recording. And I'm presenting a session at each stop on standardizing your tech stack. And that leads me to my first story, my headline of this week, which I will tease for you, David, which is only 37% of accounting firms actually require clients to use their technology stack. Shockingly low, and we'll talk about that. But first, let's thank our sponsors.
Yeah, our sponsors this week, we have Cloud Accountant Staffing, Rippling, Bill, and Blue Book. Cloud Accountant Staffing. In case you've missed the last 100 or so episodes, Blake and I have been discussing almost weekly that there's an accountant's labor shortage. Regardless of the root cause, the problem is real. My social media feeds are full of firms attempting to fill open positions on their teams, but how can anyone increase their staff size if everyone is attempting to hire during a labor shortage? That's where Cloud Accountant Staffing comes in. They will help you hire full-time team members for your firm that reside in the Philippines. How much would your firm change, for that matter, your life, if you could add 40, 80, 100 hours of capacity to your firm in 2025 or 2026 even? Cloud Accountant Staffing was founded by a firm owner who grew his firm by using offshore talent, and now he's applying everything he learned to help you grow your firm. If your firm is in need of expert bookkeepers, accountants, CPAs, or virtual assistants, head over to accountingpodcast.promo/CAS. That is accountingpodcast.promo/CAS. Thank you, Cloud Accountant Staffing.
Let's talk about this survey data point. 37% of firms require their clients to use their tech stack. I take that to mean that the other 63%, is that right? Yes, 63% do not. That's according to a survey by CPA.com and Bill, one of the sponsors of this episode. The survey also revealed that 97% of accounting firms admit they're not using technology efficiently, and 71% of firms say that seamless tech interactions are essential for client retention. So vast majority of firms believe that seamless tech is essential for client retention, but they're not requiring clients to use their technology stack. Like I said, 37% require it. The others don't. And I've had this in my queue for a while to talk about, and because my session is all about requiring clients to use your tech stack and how to identify one, I figured I'd bring it up. I think it's one of the things that we did in my firm that was a differentiator and allowed us to scale quickly. And it reduced training time. It increased the speed at which we worked. It definitely limited how many clients we could take on. There were a lot of clients that didn't want to do it, that wouldn't switch from QuickBooks to Xero, and we were requiring Xero. But I found that we got better clients because the ones that were willing to make that shift ended up listening to us about other things too. So you might want to consider requiring certain tech and requiring clients to switch as like a testing mechanism to see if they're actually going to be a good fit for working with you. Because if they want to choose the tools, then they really just want like somebody to do a job for them. It's not that they want somebody to partner with them or be an advisor to them. That's one of my points as well.
I mean, how did you enforce this at your firm when you had a firm, or did you let people wiggle room around this?
Yeah, no, I mean, you had to use Xero. At the time we were using Bill for accounts payable, you had to use Bill to pay your bills. We're not going to use some other system. We're not going to go into your bank's bill pay and pay your bills for you that way because it's not secure. We're not going to use your payroll. We're going to use our payroll, and you'll have to migrate over. And a lot of firms, I think, are afraid to do that because they're afraid clients will say no and won't want to work with them.
Well, it's the only way you could scale. Do you know Deborah Kilsheimer offhand? out of Florida. So she really built $1 million accounting firm, $172 a month or whatever she's charging landscapers. But she made them standardize on everything, including even banks. She would move them all to Chase because Chase was one of the first banks that had like an accountant workflow or a secondary login. So not only the tech stack, she'd make them change banks or she wouldn't take them on as clients, but that's the only way she could scale doing her bookkeeping her bookkeeping business at $170 a month was because she had to have standards across the board for every client. And then she would only take clients if they moved their bank account, because then the bank feeds worked good with QuickBooks and she could do everything else. Yeah.
And so that, like, that's also part of my presentation. I mean, it's on behalf of Relay. So there's like so basically the idea is that your inputs into the accounting system need to be fast. They need to be accurate. And so owning that bank relationship, like requiring a certain bank that you know works well, is super critical. And so I'm saying expand the tech stack to include banking, and then also go out and expand the tech stack to include reporting and forecasting and dashboarding. And so that's how you get the expanded tech stack. It's all about the data in and the data out, not just the accounting.
Yeah, because I think everybody's too focused on getting people to use their portal. And you really got to get them to just manage their data properly.
Yeah. Yep. So let's talk about another stat here, David, and then I'll hand it over to you to talk about AI Workslop. Entry-level auditor jobs fell 43%. It's happening, David. This fear that we've had that artificial intelligence is going to reduce entry-level jobs and disrupt the pipeline, it's happening.
Like, is this a reduction in hiring or reduction in available jobs in the market? What does this mean, this decrease?
This is according to a study of job postings, 126 million job postings. And entry-level auditor job postings have plummeted 43%. So almost in half since January. The financial services sector overall saw a 24% decrease in job postings, and it is attributed to AI automation that is eliminating routine tasks traditionally handled by junior staff. Interestingly, senior positions, those with 10 or more years of experience, increased by 6%. So firms want more experienced professionals. They're willing to pay them more. They don't want the entry-level people as much.
So this is interesting, because we've seen stories where firms are not adopting as much AI successfully as they say they're going to or they want to. So is this a forcing factor? Like, we're just going to hire less auditors, entry-level auditors, which is going to force us to automate? Or is this because they've already solved it and now they need less people? My guess is the forcing factor.
The forcing factor? What is forcing about it?
Well, if you don't hire these entry-level people, the rest of your staff and the rest of your company has to figure out how to automate it. Ultimately, because you don't have the bodies now, you're not going to hire those positions. You have to solve it with AI.
Well, so they're using AI to. Sorry, you cut out for a second, so I might have missed that. Like, my view is that these firms are extremely short-sighted. They are just trying to juice profits and revenue in the short term. And the easiest way to do that is to replace your entry-level people with AI.
But did they do it yet? That's my question.
Yes.
Are they actually successfully doing it? Or is this a lay them off first type thing, or don't hire them first?
No, I think it'd be crazy to lay them off and then do it. I think it's happening. I mean, we're seeing it with accounts payable. So
yeah, I think jobs like that. Is it happening for audit is the question.
Yeah, but think about it. What the stuff that an entry-level auditor does is so basic. Cash confirmations. You can have an AI agent doing cash confirmations all day long. It's not complicated. Checking the box kind of activities that entry-level auditors do is being automated by workflow software, automation, AI. And it was already getting automated before, and it was getting offshored before, right? And now it's just accelerating that trend, right? Ashley in the live stream says, also outsourcing. Yes. Thank you, Ashley. So that's been happening. And I think the AI stuff is just making it easier and easier to do more of it. And
but
firms are also,
confidence
as Ashley says, firms are cutting back on hiring because of economic uncertainty as well. So we've got the economic uncertainty. We've got new AI tools accelerating this trend. And here's another related story, right? This is accounts payable professionals, so AP clerks. Nearly half of accounts payable pros now fear layoffs in 2025, and that's up from 27% last year. So it's like 27% last year were afraid of layoffs. Now it's 45%. So they're the ones in the companies seeing this automation being applied. And if I think about what is AI good at, tasks, individual tasks like matching an invoice to a purchase order, paying a bill, getting approval on a bill. This is something that you could build a bunch of AI agents to do. And you're not going to eliminate all the people in that department, but you're going to eliminate a significant percentage of them and have the people left running the bots.
Yep.
And that was a story in CPA Practice Advisor. Yeah, these AP professionals are not using their PTO. They're worried about the economy. Some are optimistic about AI, but if you're just in there processing bills, paying bills, approving expense reports, we've seen there are now AI agents that can approve expense reports that are
Prior
being
to
built.
all the AI stuff, when I set on my own in 2018, I refused to ever type a bill into QuickBooks. I will type an invoice. That's worth my time. But I will not type a bill or receipt. It has to go in through, and I used AutoEntry and I used Dext, and I'm using the QuickBooks built-in, quote unquote. You can throw the words around AI, but it's just like the bill scanning feature, right? Maybe it's AI, maybe it's not, maybe it's human. I don't know. I don't care. But like the point is, like the job of typing bills into my accounting system, that's gone away. There's no point in doing it.
Let's thank our next sponsor. And then after that, David, I'll have you talk about AI Workslop.
Workslop, perfect.
My new favorite word. Thanks to Rippling for sponsoring this episode. Rippling is the all-in-one platform that unifies your client's HR, finance, and IT in a single system. Accountants, if your team is stuck juggling payroll, benefits, time tracking, and IT, margins slip away fast. What if all those systems actually work together? That's what Rippling does. One platform where adding a new hire automatically updates payroll, benefits, and compliance, as well as laptop access. No more chasing tickets or wrestling with spreadsheets, just more time to focus on higher value work. With Rippling, firms can turn workforce advisory into a recurring revenue stream. You'll give clients live visibility into labor costs, overtime trends, and compliance risks while offering insights that shape business decisions. It's how firms move from reactive admin work to trusted as strategic advisors. You protect margins and build stickier client relationships along the way. And to sweeten the deal, when you book and complete a qualified demo, you will receive a $100 gift card. If you're ready to elevate your firm's advisory practice and get a $100 gift card, head over to accountingpodcast.promo/rippling. That's accountingpodcast.promo/RIPPLING.
So yeah, let's talk Workslop. I feel like this kind of hit the mainstream. I heard it on multiple news outlets and multiple places. But a new Harvard Business Review study warns that low-quality AI-generated work, dubbed quote-unquote Workslop, is frustrating employees and creating hidden costs for businesses. So 40% of workers are reporting to have received Workslop in the past month.
Workslop.
The average cost is about the average cost is about an hour and 56, almost 2 hours wasted per incident. So it's about $186 a month, almost $200 a month per worker. So every time one coworker gives another coworker slop, it's costing your company $200.
What is Workslop? I'm picturing like the stuff you feed pigs. Slop. Is that what?
So what is Workslop is not fully defined. It's almost like that argument about pornography. You know it when you see it, right? Like,
come on, give me an example, David. What's Workslop?
So when people, they're blindly, it's really blind use of AI. Right?
Okay.
You do it, you don't review it, and you just hand it off. And to some extent, you think about the waste of time. We have this dilemma where we constantly get guest pitches, and a lot of them are written by AI. And then we have AI responding to AI-generated guest pitches. That's all Workslop going back and forth.
Here's the Workslop, though. The Workslop is when the email that pitches the guest references a different podcast that's not ours. It's like personalized to us, but in completely the wrong way. and then it sounds fake. It's got errors. It looks good. Like if you look at the email, it's nicely formatted and it looks good, and then you actually read it and you realize that it's garbage.
Which is crazy because in theory, you're using AI because this dilemma that's so weird about AI. Computers used to be accurate, and now with AI, they're kind of inaccurate, and so now you have to babysit them because it's using made up lines here. It uses the wrong podcast name. It's slop. I think this Workslop's the right word for it. Now, 40% are saying that it's from peers. Direct reports cause 18%, and managers are 16% of the Workslop. So managers are using. They're causing it as well.
And like so, basically, this is me like you. Let's say, David, you focus on the Earmark product now, right? You're our head of product at Earmark, and it's like if you sent me some sort of like detailed report asking me for my opinion on like this next product feature, and then I just passed that into AI and was like, respond to David, and then it gave me like this big long email, and I just sent it to you. And so it looks like I did something, right? But then it doesn't make sense. It's all garbage.
No, but you've sent me Workslop before. I've gotten some emails where I'm like, this is like, Blake used AI for this one. I know I've gotten some Workslop from you before. Now, here's my 2 cents on this. You ever hear that saying about like famous people that are jerks?
Yeah.
Like a celebrity's, that guy's an asshole. He's mean to everybody.
Yeah, sure.
Fame didn't turn them that way. They were already that way before they became famous. Like that's part of who they are. And arguably, employees that are turning out Workslop probably already did Workslop before. They just did it at a much slower volume. All this is doing is letting crappy employees do more crappy work faster. Like Workslop's Workslop, because one of the stats is 53% said they felt annoyed and 42% saw the senders as less trustworthy. And if you think about go back to the world before AI, if somebody gave you crappy work, you would be annoyed and think they're less trustworthy, and you'd give them less work to do. So the people that are pumping out Workslop are probably people that historically have pumped out Workslop. They're just doing it at a huge volume now.
Right. And I imagine it's worse in organizations where the amount of time you put in or the amount of like quantity of work you create is what is valued.
Oh, like the number of hours worked.
Yeah, as opposed to the quality of the work that you do. Yeah. Like, what would be Workslop in accounting? It would be like using AI to like automatically categorize all the transactions and close the books, but they're all categorized into the wrong accounts. I mean, we've all seen this when we've hired people to do tax returns or to do bookkeeping work, and they do it, but it's just really crappy. That's Workslop.
Or anytime somebody, there's never an error. Everything's always perfect because they're the first one done. I didn't have any reconciled discrepancies. I didn't have all my tests passed. Like those are scary. I'd much rather if somebody's like, I found this. This is odd. This didn't match. That means they're being thorough.
Yeah. You know where I'm seeing the Workslop? It's in the like hiring process because we're hiring a lot of people right now. And it's incredible. There are like developers who are out there who are responding to the questions I email them. I do like a pre-screen and they respond to the questions. And sometimes I get it back and it's just like AI wrote this. And they didn't even try to edit it or make it sound good. It looks like AI Workslop. Sometimes we've had people get through to the actual like coding exercise and then they'll submit Workslop for that. And that we'll catch that sometimes. But then even then, sometimes people will get through and we'll do the actual interview. And we had a situation where they were clearly feeding the audio into an AI. And
they were getting Workslop answers.
They were reading the answers that the AI was giving them, like pausing.
We can't prove it, but
why else would you pause?
Note, 4 of us reconciled this in our own brain. It didn't feel right. Yeah.
So it's going to be this is the problem with generative AI is that it enables everyone to create so much that we're going to create a lot of crap. So filtering through it, sorting through it is the new challenge now. I guess it's not a new challenge because that challenge was born when the internet came about.
Yeah.
It used to be that to like put knowledge into the public domain, you had to publish a book. You had to get published
or if you were at a
somehow.
company, you're the CEO of some company, you'd have to first dictate a memo to your secretary who'd take it to somebody that typed it to somebody else who would go to a Xerox room to Xerox it. Somebody else would place that memo on everybody's desk. It's a lot of work. So you're basically doing one memo a week, not with AI and technology. You can do hundreds of memos every 40 seconds. It's a different world.
Okay, so since we're talking about a lot of statistics, I want to do another statistic that I've had here for a while, and that is another scary one. 32%. A third of people admit they cannot recognize AI-generated fake receipts. And it's not just people, it's accountants. A new survey found 32% of accountants admit they can't recognize AI-generated fake receipts if they saw one. 30% are already seeing more fraudulent receipts since last year, and 42% suspect that colleagues have submitted fake or altered receipts. So a good chunk of accountants can't recognize them, are already seeing more fake ones, and suspect that colleagues have submitted fake or altered receipts. That's 42%. That's a lot.
Yes, they're just not confident that they've stopped any of this themselves.
Yeah, because it's hard to recognize them. If you want to see just how difficult it is or how easy it is to make one, just go and ask ChatGPT to make you a receipt.
But hasn't this been going on forever? People would just pick up a receipt up off the ground at McDonald's and turn that in as an expense report, not actually buy lunch.
I've never heard of that happening, David. Is that you're talking about? Are you telling a personal story here?
But I've seen where people will, negotiate or buy other people's receipts, right? Because they don't want to fill out the expense report or whatever.
I've heard that story before, but did people actually? I guess trading receipts. I've witnessed trading receipts before. Yes, somebody who had the expense account and somebody who didn't.
So what's the plan for these people then? So I'm an accountant. I have no confidence in recognizing receipts. That's just it. I have no belief in myself. Are there tools? Well, is there a way to solve this?
Yeah, I mean, the way to solve it is for these expense management solutions to build AI fake receipt detection in, because there's definitely ways to identify fake images. I actually watched a really cool YouTube video, a guy who specializes in fake images, and he's been specializing in them for years before AI was a thing, people doing it in Photoshop. And a lot of times it would be with ransoms. So somebody says, I've kidnapped somebody, and they send a photo, and you want to know if it's real, or you want to know if it's fake. And so he gets called in to do these high value image authentications. And one of the ways you can spot fake receipts or just fake images in general generated by AI is that he says the AI models do not have a model of physics. So when they generate these images, they do it by building the image from 1 pixel, and it builds out using the statistical model to look like other images. But it's not building it where the light sources are defined by physics, and so the shadows will be wrong. Yeah. The way the light casts on the image does not match a light source that is outside of the image. So this is something that the models can't do, the image generation models at the moment. So that's one way you spot them. And I wonder if you could do that. There's got to be something with fake receipts, the way the paper's crumpled, or the way the light hits the receipt, the shadows.
If it's missing the shadow of your phone when you take it, because you always never can line it up perfectly to not have your own shadow be in the way.
I mean, the other way to solve this is simpler, which is what Mo says: require use of company cards so that you can verify the expense from the receipt. There's other simpler ways. So I think, in general, we've talked about this on the show before. In general, there's an issue we now have with verification in a digital environment, PDF bank statements, so easy to fake, have been easy to fake, but are even easier to fake. And photographs, and when nothing is physical anymore, how do you as an auditor or an accountant rely on the document that has been scanned? It's going to be a big
especially
problem.
If it's just scanned and provided to you. You're not downloading the source doc yourself. It's just an attachment. I agree.
All right, I have another stat, but I'm going to let you take the next story, David.
Yeah, I mean, one way you could possibly deal with these AI generated receipts is to have humans in the loop. You could have AI look at it, but then a human in a loop. So Zapier announced a new feature literally called human in the loop. So when you're automating something now in Zapier and you're using AI, you can create steps that will pause your Zap and then send a message to maybe your team on Slack or an email that drives them back to review something or answer a question before the automation keeps going. And like you've kind of hacked this up externally, but for it to be
Yes.
built into Zapier now. And then I think that next level is, why do we not have this in other apps? This like pause workflow. Everybody's trying to have AI just be magical and just pump out at the end. There's not enough chances for you to review the work.
That's right.
Along the way.
I love this. I'm so excited to try this. And we use Zapier extensively at Earmark for all of our automation. Sometimes people, like when I say that, the people who are like really sophisticated with automation and AI will like poo-poo me, you know, like, oh, you should be using Make or you should be using N8N. And then I say, well, I'd rather go with the simplest thing that works because I know that it's not going to break and I know that my team can fix it and change it if I can't.
Yeah.
And it works well enough. And they keep adding features like this, which will allow us to not have to hack together approval workflows in other workflow software. So that's really, really nifty. And so the takeaway for everyone is when you are building AI enabled workflows, don't try to automate the whole workflow. Try to automate one task in the workflow. And so look for software that lets you build out a human plus AI workflow. And
that's
if you're a
good way to
developer,
think about it.
if you're a developer, like especially if you're building practice management or tax workflow software for accountants, really think carefully about how you can integrate AI at the task level, not the workflow level. So what do I mean by that? I mean, if you're building like a tax workflow in your software, break out all the steps the way a human would do, and then say, for this task, an AI might be able to do it. And the example is extracting the W-2 source document information and sticking into, I don't know, the software. Or going through all the files in the folder and renaming them appropriately. Like that's one step in the whole workflow. Just have AI do the small stuff to start. Yeah. Because like it can do tasks like that with very, very high confidence.
And this is going to be included in all the pro plans or higher. And here's how nice of Zapier. They aren't going to count this against your task quota. So, so you don't have to pay extra when a human on your team does this step in that Zap. That won't count as one of your steps.
Because I'm doing that step. Yeah. Here's another stat. 54%, so just over half of tax practitioners, 54% are currently using AI for research. Yeah, you're shrugging your shoulders there, David.
No,
how do you react to that?
54% of staff
of tax pros are currently using AI for research.
It feels low.
It should be 100%.
What else are you doing?
It should be 100% are trying it, and it's only 54%. It's funny because 86% believe that AI using firms have a competitive advantage. So like everybody thinks that you have a competitive advantage if you do it, but only 54% are using it. I wonder of the portion that aren't, how many are just blocked by their IT at their firms from using it still?
Yeah, it's probably policies. Some of it's probably old habits are hard to break.
Yeah.
Like if you're paying for some third-party tool that you've been using, or maybe you still have the paper docs you research in. I don't know. Maybe you go out to the IRS website. If you have the old habits, sometimes it's hard to break those. It's muscle memory. But my money is on they're being blocked at their IT level.
Yeah, that's my guess. 81% are using search engines for tax research, despite paying for professional tools. And
even that feels low.
I guess because the other ones are using the professional tools, I suppose.
The tools in-house.
Yeah. So by the way, this survey was done by BlueJay, which makes an AI tax research tool in cooperation with CPA.com. So since this is a CPA.com's AI CPA survey, we can assume that many of these firms are larger. Therefore, IT is a blocker in many of those firms. That was actually like the biggest reason that I left public accounting. I was at a large firm, and I could not get IT to be my partner. They were my blocker. and I hated it. I couldn't handle that. I might have stayed if it wasn't for that. If I had if there was a local, we didn't have IT in our office either. They were up in Northern California. If I'd had somebody local that could embed in my team and help me, that would have been amazing. So there's a big opportunity for AI tax research, and that's what companies like BlueJay are capitalizing on. What's interesting about that, David, is there's not much of a competitive moat when it comes to that, meaning that it'd be pretty easy to build a competitor. We did this. We thought about this on the show previously. Yeah. You did a question that BlueJay had as an example on their website. You did it with ChatGPT, yeah, and you got an amazing response. And I guess the competitive advantage of something like BlueJay is they're supposedly training it on specific databases, but you can more and more do that just with ChatGPT by instructing it to only use certain sources.
You don't even have to instruct it. You built a custom bot for our team all about NASBA CPE standards.
Right, a custom GPT. I don't use it.
I just use it off the shelf and it just works. I didn't tell it. I don't say, please use these documents or these websites. I just ask. I say, per NASBA guidelines, does this qualify for CP? And
you're saying that you use the generic ChatGPT. You don't even use my
exactly. I don't even use the special training.
Well, how do you know that you're getting the right answer?
Well, after about 10 times, because our developers were still using it, and we kept covering the same loose answer conclusion.
Well, I guess that's because now the new model GPT-5 knows to prioritize NASBA itself and goes and finds the PDF and reads it without me having to tell it to.
Or Sam Altman's a big liar, and he says he's not going to use what you train the models on to train the models, which is what I actually believe.
What? You conspiracy theory? I mean, maybe. Who knows? By the way, since we're talking about CPE and NASBA, NASBA has released a draft along with the ACPA. They both together have released a proposed revisions to CPE standards. And normally these revisions are not major, but in this case, I'm very excited because self-study is going to become more like nano-learning. So nano-learning is this CPE delivery method that was separate from self-study and from live, and it was designed to enable short classes of as little as, I think, 0.1 or 0.2 CPEs, which is a 10-minute, 20-minute course. And very few CP providers ever started doing it because the states were slow to adopt it. And it wasn't on all the states, so we just didn't do it. We just chose to do self-study. And we were blocked at half a credit. That's the lowest you could do. But now, thanks to the new standards, we're going to be able to do 0.2 credit courses.
So if the podcast is 15 minutes, we could still issue a CP.
Yes. So it's really exciting because I think that a lot of shows are best when they're short, one short topic, 15 minutes, 20 minutes at most. Evidence shows that people's attention spans kind of drift away after 20 minutes. So I'm excited because I want to start, once that passes, hopefully that'll pass soon. The comment period goes until December, and then it'll take them a while. Maybe next year it'll get adopted. That would be great. And then we could start doing deeply technical content that's really short.
Yeah, the argument I heard for this nano learning concept was from a learning development leader at one of the bigger firms. And what he said was, imagine you're a tax specialist, and maybe it's you have to fill out some paperwork for the electric tax vehicle credit, but you haven't done it before, or you haven't done it in a long time. So right when you go to do that form, you could just pull up a 10-minute video and watch it really quick and refresh your brain. Then you get credit for it, and you go do the work. So it's almost like getting your education right when you need it, instead of I went to this webinar 8 months ago about electric tax vehicle credit, and you don't remember anything.
Yes.
But you get those instant nano learnings. Yeah.
That's where I want us to go with that. That would be amazing. Here's some app news. Drake Software has launched cloud-based tax. Yes. No, this is not a story from 20 years ago because we're talking about tax. Drake Tax Online is the new browser-based tax software that complements Drake's existing desktop solution. It was announced last week, and it's sort of in a hybrid phase at this point. You can't do everything with it. So you can do 1040s, you can do 709, 1065, and 1120S fully in the browser. But for the 1120C Corps, 1041 Fiduciary, and 990s, and estate tax returns, like a 706, you have to switch to the integrated desktop data entry mode, which is bundled with Drake Tax Online, but is still desktop. But it looks like, I mean, based on where they're going, they're going to eventually have it all be browser-based. So this is sort of like a bridge.
Surprised it took them this long. I mean, like you said, like this
You're
is not
surprised?
from 2012, 2013, but
Well, when you consider that all the legacy tax preparer companies still don't have cloud, like it's kind of amazing. I mean, it would make sense that Drake is the preferred choice for small firms. So they were able to move faster on this. So yeah, if you have mostly 1040s, S Corps, 1065s, and you want to do work on your Mac through a browser, and you don't want to deal with desktop software, you can pretty much do it. You might have to install the desktop software for like some other forms, but I mean, if you're already using desktop, then easy, right?
didn't Gruntworks just finally move to cloud now? Or
What did you
they had
say?
an announcement. Gruntworks.
I don't know what that
Grunt
is.
Works. I think they're in the tax form scanning type thing, but I thought they just moved to a cloud announcement recently as well, because I think they were one of those older
Well,
tax automation organizer type companies that were always desktop based. Maybe it's finally here. Congratulations, tax pros! You get to
No,
finally use the cloud.
David could be hallucinating. He does
I
not
could be.
sure if this is accurate. Like,
That could be. I'm on
right?
Gruntworks
We agreed we
website
wouldn't
right now.
hallucinate on the program, David. We're trying to be better than the LLMs.
Trying not to. That's I'm on.
I mean, you
Gruntworks
can look it up
website
if you
trying to
want.
see.
Why
Yeah.
don't you look it up while I talk about Keeper? Did you talk
You
about
wanna read
Keeper's
our
new
ad?
features?
Can you
Our
read
new
the ad
ad?
for Bill first?
Okay. Thank you, Bill, for sponsoring this episode. October is Cybersecurity Awareness Month. And this October, Bill is putting the spotlight on payment fraud prevention. As a listener of this podcast, I'm sure you know that cybersecurity isn't just a tech problem, it's a business risk. Considering that more than half of small businesses aren't confident in the security of their B2B payment systems, that means there's a huge opportunity for accountants to step in and lead. As an accountant, you're often the first line of defense when it comes to protecting client payments. Bill is the all-in-one financial operations platform built for accountants. From AP and AR automation to spend and expense management, Bill helps firms streamline the back office. Bill helps you protect every payment with customizable roles and approval policies to ensure true separation of duties. Through the month of October, Bill is offering real, practical advice to help you protect your clients and their money. Learn about protecting payments with automation and AI from industry experts, including Donnie Shimamoto and Laura Redmond. Register for Bill's free CPE webinar on October 8th. To register for that, head over to accountingpodcast.promo/Bill. That's accountingpodcast.promo/BILL.
I might be crazy. I just made the whole thing up then because I cannot find anything about this.
You hallucinated,
I hallucinated it completely.
which is totally fine. It's a great example and proof that like humans make up stuff too.
But see,
It's
if I
not
would have
just
used
AIs.
AI and sent that off, all it's going to do is be Workslop. That would have came from me anyways. So it's the same Workslop. This is what I mean with the Workslop. I would have sent that out to you from AI, and I wouldn't have known that it wasn't true.
Well, let's talk about. Did we talk about Keeper? I feel like you just mentioned Keeper. Did you
You
talk
were
about
starting
Keeper?
to say something about Keeper.
But did
and
you
then
mention it earlier in the episode, or am I hallucinating that?
You hallucinated that.
Okay, I'm
we're in
hallucinating too
trouble.
now.
Everybody's going to think this is AI doing this episode. We're in trouble.
No, they won't because it's such garbage. It's obviously humans. Okay, so Keeper, they just launched a new product called Scale, and it uses AI to turn complex payroll reports and settlement statements into ready-to-post journal entries automatically. So this is AI that can convert your reports that you're pulling from client systems and turn them into journal entries. And it's one of my favorite use cases for AI. We saw Flowcast doing this on the mid-market end of this type of software.
So this is when your client's using a payroll system that doesn't talk to the GL?
Yeah, or like e-commerce settlement report that doesn't integrate, e-commerce system that doesn't integrate into the GL, and you got to get a report from the system, and then you got to turn that into a journal entry. So this is something where, how did we do this in the past? We had a workbook where we would pull in the report and we would paste it in, and then we had pivot tables or formulas that would then do all the calculations to create the journal entry that we would then export and import into the general ledger. And that's a huge pain in the butt. It's a lot of work. And AI is really good at taking those inputs, and once you've given it an example and you've given it instructions on what to do, it can very, very reliably create the journal entry. And it doesn't hallucinate the numbers because these AIs can now utilize calculator tools. So you can actually have it do the calculations using code and check its own work. And this is exactly the sort of task that you can get AI to do with like near 100% accuracy. So Keeper now has this. It is for QuickBooks Online at this point. It's available. It launched September 25th, and it's $50 per client per month. What else can it do? It can automate accruals. So full automation of posting, tie out, and roll forward of all accruals, generating audit-ready schedules in minutes. I mentioned the journal entries, and it's combined with their task management, client communications, and reporting features they already have. So if you haven't heard about it, I think of Keeper as actually like very much like Flowcast, but a lot of people haven't heard about that either. I guess it's really financial close management. So all that checklist stuff, all that stuff that needs to get done to close the books, all the tasks and review and everything around that, closing the books.
And yes, you could use it with tax clients. There's all this tax flow workflow software for tax clients, but there's not a lot for client accounting services, and that's what this sweet spot is.
Right. Yeah. So think about this. Yeah, this is the client accounting services version of all that software that's designed to like get the data from the client and tie it out and do the adjustments and all that. Like this is that for client accounting services. And it's honestly, there aren't that many solutions that do it for that an accounting firm could use. So check that out. Not a sponsor. We love Keeper though. Let's see.
Well, not a sponsor this week, but they do sponsor yet. Sometimes.
Okay. I talked about that. David, you had a story about the State Department using QuickBooks. How is this? Where did this come from?
That's what caught my eye. So this was an article that was in gamblingnews.com. This website I go to all the time. The reason it popped up is a former U.S. State Department employee, Levita Ferrer, has been sentenced to 12 months and 1 day in prison for embezzling more than $650,000 to fund her gambling habit. She was a senior budget analyst and exploited her access to the State Department's QuickBooks. I don't know why they were using QuickBooks for something, maybe a petty cash. It just seems crazy to me. And she issued fraudulent checks between March of 2022 and April of 2024. So you're probably wondering, what did she do? This is the oldest trick in the book. You print the check to yourself, and then you change the name in QuickBooks.
Wow.
She just did that. So she did that 60 times to herself, and 3 checks to an unnamed party that was apparently involved as well. So 63 total checks. And they're $10,000 a piece checks because she took $650,000. There's no checks and balances happening at the State Department. It's beyond me.
It doesn't surprise me.
This was able to occur.
Wow.
Yeah, but I don't know what, apparently, the State Department uses QuickBooks. I did not expect to see that.
Well, like you said, it's probably for one particular account, and they roll it up or something. It's just stupid, though.
Wasn't this the kind of stuff Doge was supposed to find?
Yeah. Oh man, I haven't heard about Doge in a while.
Sorry. Sorry. Rewind, delete that from the episode.
I missed Doge. Now it's just all news about tariffs. What was the news today? Trump threatens fresh tariffs related to furniture and movies. Yeah, Trump announced that he'll impose substantial tariffs on any country that doesn't make furniture in the United States. I thought this article that popped into Accounting Today was funny because the the second sentence says, it's unclear how that would work. Companies, not countries, manufacture furniture, and the duties are charged on specific imports, not governments. Details to follow, the president wrote. Trump said he would act in order to make North Carolina, which has completely lost its furniture business to China and other countries, great again. I mean, that's not true because like all the high-end furniture is made in North Carolina. Like that's where Bassett is, Bassett furniture, like all that. So
Unless you want Italian furniture.
I mean, do we want to bring back? Yeah, maybe we should pass a tariff on like IKEA, right? We could have all that compressed wood stuff made
But
here.
when is it furniture? When I assemble it in my house? Can you define when it becomes a piece of furniture?
Right. Yeah. I'm sure it would get an exemption. He's also threatening a 100% tariff on all movies made outside the U.S., claiming that Hollywood has been stolen from America like candy from a baby. Market shrugged.
So Trump's trying to get in good graces with the Hollywood scene, who tends to all hate him. This is a smart business play by Trump here again.
I mean, yeah, it's interesting. Like all the film stuff that moved out of Hollywood, went to like, a lot of stuff got shot in Vancouver for a long time.
Atlanta.
Because Atlanta is just so expensive to film anything in LA.
Well, I think they have to film, like if you want to show movies in China, you have to film some portion of the film now in China.
Yeah, I mean,
Marvel's had to deal
make
with that,
America
right?
China again. That would be great. Let's do that.
So I have other Trump news if you're done with these new tariffs.
Well, there's also going to be a 100% tariff on patented drugs starting October 1st. Unless you're building a manufacturing plant in the U.S., then you get a complete exemption. And that tanked the European drug maker stocks. Nordisk fell 3.1%. AstraZeneca dropped 1.6%. This is actually one of those things that I think we probably should do more here is like maybe not make all the prescription drugs overseas, like given how dependent we are now on prescription drugs. Furniture, maybe not so much, right? Movies, that's not exactly a national security risk. Prescription drugs that we need to survive and live, yeah, okay, great. But like all of this, there's no subtlety in any of this, right? Like that is what's important. Anyway, go ahead.
I said this for a long time. Like when Trump discovers these South Korean K-pop boy bands that are taking jobs that good-looking white boys used to have in this, teenagers used to have in this country, and now it's good-looking South Korean boys. Like he's going to want to tax K-pop. You just know once he gets word that this exists, that'll be the next thing he wants to do. Because it's still it's jobs, right? Ultimately, and money leaving the country.
Have you seen K-pop Demon Hunters, David? Is that why you brought this up? You've been
No.
watching that?
I think my daughter's finally out of this K-pop phase. It was there for a long time.
Oh, but
Maybe
the Demon Hunters, I mean, like that is, she's got to come back for that. That show is, I've been watching that with my 10-year-old, and he just loves it. It's insane. It's like a fever dream.
A fever dream.
Yeah. I feel like I'm on drugs watching that show when I'm completely
Wow.
sober. Okay. So
We got to do
What's
another
next?
ad. If you do the last ad,
okay.
I have another Trump story. If you get the ad ready.
can you do a different story? I'll let you decide. Thank you to Blue Book for sponsoring this episode. Most people in accounting know that AI is powerful, especially if you listen to the show, but very few know where to start or how to make AI actually useful. It doesn't have to be this way. Introducing Blue Book. Blue Book turns AI into practical accounting workflows that save time, reduce errors, and make accounting teams more effective. Blue Book agents are changing how accounting teams work. Instead of hiring more people or using clunky automation tools, you can delegate tasks to AI agents that actually understand accounting. Blue Book's agents review your general ledger for compliance issues, scan incoming bills for red flags, and handle the repetitive work that's eating up your time. It's purpose-built for accountants. It's simple to use, but sophisticated enough to handle complex finance workflows. Baker Tilly is already using Blue Book, and over 500 companies are on the waitlist. As an accounting podcast listener, you'll get priority access and bypass the waitlist. Onboarding takes just 15 minutes. To see why CFOs and accounting firms are making the switch to Blue Book and to get 20% off your first 3 months, enter code EARMARK. Head over to accountingpodcast.promo/bluebook. That's accountingpodcast.promo/bluebook and use code EARMARK. That's EARMARK to get 20% off your first 3 months of Blue Book.
All right. So I don't know if you heard because you were out last week, but Trump also wants to increase the fee for an H-1B visa.
Ooh, that would be a big deal.
Which
for
previously was a couple thousand maybe dollars. Now he wants to make it $100,000.
Wow.
So most of these H-1B visas are used for like STEM type jobs, a lot of computer engineering type roles, computer science type roles. And I understand some of the motivation here is because you bring people in and then, the fear is you're going to train them and they go back to their country and start industry, right? And competitive offerings. So I understand where that fear is coming from. But this really, Trump courted these tech companies, right? That's to help him win the election. He courted Meta, he courted Google, he courted Apple, he courted Microsoft. Well, now this is probably going to bite him back. For example, Amazon has 10,000 applications for H-1B1 visas. Now, that's $1 billion now, this fee.
Mm-hmm.
Like the tech companies, Meta has 5,000. So that's $500 million for Meta, $500 million for Microsoft.
Yeah.
So these companies are going to push back on this. Like he's not going to win on this.
Well,
it's just way too much money.
He used them to win the election. Now he doesn't need them anymore.
Exactly. He used them to win the election. Yeah.
Right. And, this is going to be popular because, let me play devil's advocate, David. Like, what's so great about having foreign workers come into the United States and take really good IT and accounting jobs? Like, why should we support that?
The issue is, the argument is they're not taking the jobs. Like, we don't have.
That's always the argument. Every employer's like, oh, we can't find the people to do the job. Meanwhile, there's all these like graduates that are sitting around like looking for jobs. Like here we go. Azrael says, any advice on getting that first job out of college? The job market has been rough. So you flood the market with H-1B1, whatever. What is it? H-1B visas. Yeah. Yeah, and then these companies have no incentive to create training programs to upskill the recent college grads that need jobs. So that's the argument in favor of getting rid of these programs,
and the argument
or making them
against
more expensive.
them as well is I feel like, and I've seen this, they can be used to abuse talent. So you bring somebody in on that visa, you pay them less, and then you threaten to pull the
Take
visa.
Away the visa. Yeah. Do you think that worker is going to stand up for their own rights, even though they're here in the U.S. and they have workers' rights? Are they going to do it? No, they're going to work 60, 70, 80 hours a week, and they're not going to complain because they just want to keep their job and stay in the country.
Yeah. And he wants to cap this to 65,000 regular visas and 20,000 for U.S. advanced degree holders. Mm-hmm. And right now it looks like 71% are from India and 11% are from China. So this is really very specific to India to some extent. Mm-hmm. Now, I did do some research about the accounting industry. So in general, the accounting firms don't use this model to hire people.
They use it. It's not like huge like in IT though.
Yeah. Now, the Big Four does some, but in the grand scheme of how many people the Big Four employ, in the grand scheme of how many H-1B1 visas are done in tech, the Big Four barely does.
Well, how many are the Big Four doing? Like what? How many?
I don't even have the exact number, but relative to their head count, it's like so small. It's not even.
I don't think it's immaterial. I think they definitely do it. I remember we talked about this a while ago, and it's like accounting is not at the top of the list. It's mostly IT roles.
Yeah.
But like accounting's on there, and it's like a significant number of workers. Like what? But I guess,
All right, sorry, I brought AI slop to the show. I should research.
Well, do your research, David.
More numbers, yes.
No, I think it's like tens of thousands of workers.
You still think it's that many for accounting?
Well, but still, there's like 1 million accountants with a license in North America. So in the big scheme of things, it's not. It's like maybe a few percent. Does that hurt American workers? I mean, not really. Probably not right now. With the shortage, I don't know. I think it's a bigger problem in IT. That's where you see on message boards people talking about how like it hurts an American worker when there's just like so many H-1B applicants who can come in and take your job. It means that you lose power over your career,
That's true.
right? Because they're willing to work and not complain.
Because there's this power that's over the employee that they don't have.
Yeah. So if you're kind of like a mid-level, if like you're not at the top of the pack and you're just sort of like, getting along, it doesn't help you. It hurts you. Yeah.
And this will take place in the next lottery cycle, and it's only going to be new applicants only. They're not going to raise it on existing ones. So the hit's a little bit less. But the fact that it just shows you how many they have if applications out there from Amazon are still at 10,000. Like that's it is a pretty big hit, and like he's probably declaring war on tech. That you're right. He used tech to get elected, and now he's declaring war on tech.
Right, because because what tech is not popular among the base, right? Like
But the base, that's true.
Right, big tech is the new like if this is the new Gilded Age, right? The tech, Zuckerberg and Musk are like the new railroad barons,
And
the robber
Bezos.
barons.
He hates
and
Bezos, too.
They're the robber barons of our era. And so, he used Musk to get elected, and then he turned on him and the rest of his people, and now he's going to beat them politically. And we'll see if it works. All right, David, that's all the time we have this week. Dear listeners, you can earn a free continuing professional education credit for sitting through this Workslop of a podcast. Go to earmark.app in your web browser or download the free Earmark app on the iOS store or Android store. Create your free account and earn a free CPE. Yes, it is totally free. 1 per week for free. If you want to support the work we do, subscribe to the Earmark app for one low annual price, and you'll get unlimited CPE every week, unlimited courses, subscriber-only content, our back catalog, all that good stuff. We really appreciate you, our subscribers.
About 30 hours or so left to get Earmark at the existing price
Don't
of
say that
$149.99.
because it's gonna. Well, people listening on the podcast won't be able to.
Oh, they won't hear that.
They'll be
yet.
disappointed.
That's true. Just the live stream. So sorry.
If you're in the
Take
live
a time
stream,
machine.
Yeah, if you're in the
Take a
live
time
stream,
machine and go back and
subscribe
buy it.
now because you can lock in the $150 price, and it's going up to $170. Still a great deal.
$169.99. Yeah, still a great
so
deal.
it's still the best deal in CPE around. And we're going to use that money to create more awesome technical content and tell us what kind of content you think we need. We love hearing from our subscribers and our listeners. All right, I got to go to the airport to go to Chicago to do the tour. See everyone in Chicago and Atlanta this week.
Enjoy.
Bye, everyone.